Today's market call is presented by Robinhood. Elevate your trading with Robinhood Legend, the sleek, free, customizable desktop platform built for active traders. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood financial fee schedule for more information.
All right, welcome to Market Call. I am Dan Nathan. Guy Adami is here as usual. So it's 11 a.m. on the East Coast. We have a very special Market Call, Guy Adami. Let's hear it like how you might.
Well, it's 11 a.m. on the East Coast, 8 a.m. on the West Coast if you're hanging out. And in the middle, who really cares? Although there are a lot of people that do. That's Dan Nathan. I'm Guy Adami, and we're joined today by Dan.
With Steph Guild. She's a CIO at Robinhood, and our head of education, Mike Obucina, in studio. Steph's been in the studio with us in the past.
Yeah.
This is your kind of virgin voyage.
Maiden voyage.
We can say maiden voyage, whatever.
Rookie voyage.
Yeah, we're going to elevate our trading, but also the program guy by our guests here. So it's really excited. We're really excited to have you guys in the studio. We got a lot to do. You guys know Steph. She's always got a whole heck of a lot to say about the macro. We can drill down on sectors. We know that the Fed is going to be of import here because we have data again, or we will have data.
It might be
again.
Lost though permanently, is what I heard.
Really?
Some might be lost permanently.
And we are going to go over a trade idea that we put on last week in Nvidia. We're going to go through that. We're going to kind of walk you through the legend and how we're thinking about managing that trade right now. And I think we have a new trade in the same space here that we're going to talk about. Guy, let's start a little bit with how the market has opened the last couple of days based on the optimism about a shutdown ending, and then we got to get Steph's take on what risk assets.
And I'd love to hear their take, obviously, but we rarely talk about the Dow Jones for obvious reasons. But for the last couple days, the story has been the performance of the Dow Jones juxtaposed with what the S&P 500 has done, and quite frankly, what the NASDAQ has done as well. And today is no exception. Dow Jones at one point today up over 1%. NASDAQ been lower most of the day, and the S&P has been either side of unchanged. So you've been some outperformance, and a lot of it driven by the Goldman Sachs's of the world, and obviously these high price stocks that drive a big percentage of Dow gains just based on how it's built.
Yep.
With that said, it might be masking some of the other weakness that we've been seeing around the edges.
Yeah, Steph, when you think about, I'm looking at my board here today on FactSet. I have a whole host of subsectors, and I'm just looking at the banks raging here. Okay, so the bond market was closed yesterday, but I see a sea of green there. Why would the banks perform like this? We see yields down a little bit. If I look at the CME Fed Funds futures for the December expectations, it's like 65% for a 25 basis point cut. I mean, hasn't moved a whole heck of a lot in the last couple of days, but the headlines that I saw were like, all this new data is going to put, December back in play, the jobs data, this sort of thing. How are you thinking about things here?
I think the markets are, they focus on a couple of things. One is the shutdown made you feel like you had this lack of data, right? And I always say it's like before earnings season when companies have to be quiet. If your partner goes away on vacation,
which is
with
amazing.
their friends,
I love it when that
with
happens.
their friends,
my wife is just away last week for 4 days.
Well,
so nice.
Okay, but remember when you guys were dating?
Oh,
if she went, left you on red for a couple of days, and she was like in Cancun with her girlfriend, you'd probably be like, what's going on there? What's going on there? And the bias just starts to be negative. And that's why I think the shutdown data is going to come back. But now I think we have to deal with the fact that things haven't felt great. Like the Challenger data showed that, the labor market is soft. So I think actually the Fed is going to end up cutting rates. And I think that actually helps financials, right? Because it kind of starts to meld the narrative toward, we're going to have a steeper yield curve because I think the 10 year is not going to be able to move very much.
Yeah.
And then, you're also seeing healthcare or pharma do pretty well today. And I get the Dow is doing better. Like this is all the market saying like, we got to focus maybe back on quality, which is like the first time we've seen that really.
Right. And rotation possibly. I'm looking at the Mag 7 here and every one of them is down on the day. Right. And so you're seeing, money go into pharma the last couple of days and you're seeing obviously banks perform well. Guy, what did you make? You like to criticize or critique analogies. How did you feel about that analogy?
No, I liked it. I mean, listen, Steph can do no wrong in my eyes, so I sort of dug it. I mean, she wanted to say WTF, but she held back because she's a lady.
She's right in my brain because my wife was 4 days in Mexico City and she just got back yesterday. So your little Cancun thing with the wife away. I think everything went okay. Obi, in this environment and given that analogy that we just heard from Steph, talk to us about vol. I mean, when you think about this, I know you have some stuff to say about the VIX. I mean, Guy and I thought that little brief trip to 20 last week might be the start of something, but then we come right back in here.
Yeah, VIX you would think would come off a little bit more considering the strength of the rally off of Friday. Guy and I were hanging out last Friday on the week that was, and as we saw the close, there was a major turnaround in the indices midday. You would expect VIX, I think, to come off a little bit. So I think there's still some worries that there's some volatility ahead. Remember, VIX is talking about implied volatility, not realized volatility. So the market's still feeling like it's a little shaky. And to your point, when you've got the Mag 7 down on the day and you've got the Dow up 80 basis points and the NASDAQ down a third of 1%, there's still some uneasiness, I think, in the market. And I think VIX is staying elevated, even though it's come off those recent highs.
Yeah, Steph, I mean, when you think about VIX, below 20, high teens, that's kind of, well above the average. We could say, since really the lows in April. You mentioned a steepening yield curve and who that's good for. And we talked about the probabilities of a 25 basis point cut. Again, the tailwind of potential cuts. I mean, the jury's still out on that, right? Like, so when you think about it, so how do you think rate expectations, once we start getting this data, I'm sure we're going to get some sort of backward look and then the forward looking, where do you expect? Because 4% in the 10-year was kind of this level that, was real good support here. What are you expecting?
I think 4% it's going to kind of be stuck there, around there, up a little bit, down a little bit, depending on what's happening. I think I was on Sunday. I don't know if you like the news about the $2,000 to people and taking the
stimmy, baby. We're back to it. Yeah.
What is that? So what was this all for if we're not going to bring down the deficit? So that's what's, to me, going to keep like the 10-year kind of stuck there. And the bond market is also telling you that the Fed is probably going to go down to 3.5%. So now you like have this, you're stuck at the top, and then, you're at least at 3.5%, if not a little lower.
So Guy, you've been in the higher yield camp. If we were to see an acceleration of like rate cut expectations, what do you expect the 10-year to do?
Yeah, Obi and I actually talked about this last week as well. I think there's a very good chance that the market starts to challenge, and this is November, as we all know. As we get closer to the spring, the market's going to start to challenge the Fed participants, and then at some point when we know who the next Fed chair is going to be, they're going to challenge the next Fed chair, because that's typically what happens. So I still think the Fed can cut rates in December, like the market probably realizes they will do. I don't necessarily think, though, that longer term yields are going to act in kind. And quite frankly, given all the stimulus talk out there, to Steph's earlier point, I think it's just, to me, it's all bond negative, despite the fact that yields really haven't moved all that much over the last couple of weeks.
All right, let's get into some sectors here. Obi, I'd love for you to drive on the legend here a little bit. Let's pull up, we don't love the SMH, the way it's constructed. It's obviously very top heavy, and it's kind of not too dissimilar, Guy, the way you're talking about, like, not a market cap weighted, but it is a price weighted for the Dow. And then obviously, you get a market cap weighting for the SMH if you have Taiwan Semi, you have Nvidia, that sort of thing. Give us a sense from a vol standpoint, because, Nvidia reports next week. I think all eyes are obviously going to be on that. We've had, we've had a lot of this Mag 7, the AI trade. I'm just looking at my screens right now. I mean, I see Google down 2%. I see Meta down 2%. I see Microsoft down 1%. Amazon down nearly 2%. Nvidia is, down 30 basis points. But it seems like air is coming out of the Mag 7 trade. And then you would think the next thing you want to focus on our semis in general. How does the SMH look to you in vol terms? And we use this expression all the time. You know, this is a forward-looking thing that gives you a sense of how you want to express a view, right? And let's just say you are bearish on the SMH. What are the options telling you, or at least in vol terms?
Yeah, if we bring up Legend, so I got SMH on the chart. I've got a 5,200-day moving average. You can see SMH riding that 50-day moving average, popped off of it recently. But looking below, so I've added the implied volatility indicator to my chart, and you can see we are getting a gradual increase in implied volatility of SMH. And so to your point, as the sort of the tech trade maybe starts seeing some rotation, some fear of some sell-offs here, probably some people going to these options markets and looking for some protection or bidding up the price of options. Sitting right now on a 52-week implied volatility range, 38% implied vol. That's on the lower end of its range. So, you know, if you're looking at this from an options trader's perspective, vol's kind of cheap here, even though it's rising. The question is, how much more will it go?
Yeah, and Joby put that, we talked about this chart on Friday as well, and he pointed out that uptrend line on the lower third of this, and the fact that we traded down to and bounced off that moving average in a pretty meaningful way. That's happened now a couple times over the last 6 or 7 months. You can go right back to there and see what I'm talking about. So it stands to reason this thing's going to continue to do the grind higher. However, as you pointed out, Dan, the construct of this is such that if Nvidia disappoints, you throw all this out the window. So we have a week before now, and then obviously a lot can happen. You could obviously and easily see these stocks continue to do the grind higher. But if Nvidia doesn't say the things the market doesn't want to hear, to me, Dan, at least, the pain trade is to the downside, I think.
Or if they start talking about like debt,
yeah,
that will be like the scariest.
All right, let's get to that. But I'm just curious, you know, Steph, if you look at this, because you're obviously a strategist and you're also a CIO and you run money over there at Robinhood, you know, what does it mean? Is the fever kind of breaking around the AI trade a little bit? We've mentioned this. There seems to be a bubble and talk of a bubble in and around AI. And, you know, is Nvidia next week? The implied move in the options market is about, Obi, I don't know if you want to drive right here and do the back of the envelope for Nvidia and how we kind of figure that out. But Steph, while he's doing that, if Nvidia, let's say, comes in with a good print, and the guidance is fine, but it's not like, you know what I mean, that sort of thing. Do you think that's a thing that adds a little fuel to this bubble talk and the fire? Because some of the stuff's gotten a bit ahead of itself. And if Nvidia were to be the one that basically gives cautiously optimistic guidelines, I could see a continuation of this, you know, sell-off in some of these names.
I don't know if Jensen's capable of not speaking optimistically, but truly, like, they have to really beat above where expectations are, and if they're not going to beat, then I think it's certainly ripe for the stock to sell off in the short term. Expectations are for $1.25 for this coming quarter, and it's a 54% earnings growth estimate. Next year's estimates are around 48%. It's not small, right? And I think, like, the big question is, like, all this spend, all the circular money, is the cash flow there for the spend? Like, that's really what it is.
Of their customers, right?
Of their customers. And, you know, I don't know. Like, it was kind of crazy, right? That SoftBank sold all their Nvidia and like no one noticed until it was done.
But you know what's interesting about that? And Guy, I'd love to get your take on this. I mean, they're kind of, you know, if you think all of this is a bit of a shell game, right? Like the idea that they get out of Nvidia, by the way, like right now at all-time highs for all intents and purposes. So good trade there, Masa-san. You know what I mean? But if they're moving some of that capital into some of the bets that they think probably have more leverage in the private markets, that's not a bad way to trade this.
No, and I've actually brought it up on Fast Money last night, and you know, I thought it was worth pointing out that they got out of their position ahead of earnings, and good on them, as Dan just said. You know, if they've sold it over the last week and a half, whatever, they've effectively sold it at all-time highs. One of their better trades. And I did think it was worth pointing out, although as Karen mentioned, you know, the $5 billion or so, whatever that was, it's not really going to move the needle one way or the other. To me, it was more of a sentiment thing. And then, you know, not to sort of move around too much, but I just look at the way that Oracle is traded. And Dan and I have been talking about this for a while. You obviously had that huge move up in early September on the back of, you know, a lot of the same things that we've been talking about over and over again. And we have effectively now, as we trade down to 226, round trip the entire move. And I think, to me, Dan, that's a bit of a cautionary tale.
Yeah, no doubt. Obi, walk us through this on the legend here a little bit, like for some of those folks who are trying to get a sense for where the market thinks the stock can go. And again, we have regular expiration next Friday, Nov 21, and we have Nvidia coming out on the 19th. So when you think about the trade, yeah, there's going to be some volatility prior. You and I, we don't know where it's going to rally into it, like that sort of thing. But it's always good to see where market makers or the machines, whatever is doing it, where they think the stock can go post earnings.
Yeah, just you guys do this all the time. There's a couple ways to do it on Legend. If you are on your options chain, you can enable the weekly implied volatility per expiration. So this is going to look at the vol for the entire week. And so looking by next Friday, plus or minus a $20 move, but with earnings coming before that, and because it's a binary event, you guys like to look at the at-the-money straddle price. So stock trading 192.30, 192 half strike. We'll queue up that straddle. Right now, the options market pricing in roughly $16, so about an 8% expected move. The one thing I want to point out about this, though, if you are using something like implied volatility rank or a lower chart IV study, is, and I mentioned this last week, a lot of these implied volatility historical metrics are a little out of whack because you had Liberation Day, which creates this.
You could look at it excluding that.
Yeah, so essentially, if we just look at our chart and look where we're at after that vol crush from Liberation Day, we are very much at the high end of the volatility range, throwing out the April highs.
Yep.
And so, from an options trader's perspective, vol is expensive here, even if using the implied volatility rank kind of guide, it looks low, but it's really not.
All right, so guy, as they say in the biz, that's a good setup. Last week it was Wednesday. I think Nvidia was trading just above $200, and Obi, you helped us kind of work through this and figure out what the right strikes were. So we were looking at Nvidia's report on the 19th. We were looking at November 21st expiration a couple days later, and Guy and I were of the camp that we wanted to kind of leg into a short position. Now, buying outright puts was expensive, as you just detailed to us, right? So we were looking at a put calendar, right? So we're going to sell a shorter dated and help finance the same strike longer dated, and this was just week over week, right? And so the idea, and we were looking at 195, which actually might have worked okay. We don't know until Friday afternoon.
We were like, let's give ourselves a little room.
So you were like 190, especially the way the stock was moving around. So we sold this Friday 190 put, and we used the proceeds to buy the next Friday 190 put. And, that was obviously a debit, and any, if you're buying a calendar, you're going to pay, right? And we're just, we're like playing for a move back to 190. So we have a stock at 192.30, as you just said. We paid $2.40 for that. And now it's trading at about 480 or something like that. So it's a double. Now, how would you manage this trade? Because Guy and I want to stay long this 190 put that expires next Friday.
I would take that.
Well, you can take the double, okay? But right now, there's optionality. See what I did there? Because we could wait another day until where we think it's going to close, but it would take a huge move between now and Friday's close to lose money on this trade. So we could roll that this week short put and maybe turn the next week into a vertical.
Exactly. Yeah. What we wanted to have happen, we nailed it, right? We had a stock we needed to come down, right? It was, what was it trading, like 195, 196 last week?
I think it was a little higher.
Yeah.
I think it was like
we needed the move down to our strike. We got it. And I think we got a little bit of juice in the long option implied volatility, which for a calendar spread is the perfect scenario. And when you teach calendar spreads to people, the first thing you want to know is, what's my risk? Well, we're paying for this calendar, so it's the premium you outlay. But then the other question is, what's my potential profit? And you don't know. You will never know what your potential profit is on a calendar, because that back month option still has implied volatility that's moving around. And one of the new features, we can go back to Legend for a second, that's my new favorite feature, is the simulated returns, where you can queue up your trade. And so this is the cost of the trade with the current market price. You go over to simulated returns and you can visualize what that trade, what you need it to do. And you can see as implied volatility sort of rises and falls, you get this potential for profit on that long option that you won't really know what you're taking in until you close the trade. But in terms of what we needed to have happen on this trade, it so far playing out great. And if I remember, I think you put in an order for 10. You bought a 10 lot.
Yeah.
As a trade management strategy, to sort of take Steph's points, maybe you take half off, right? Take some in, and then to your point, roll the other leg into a vertical spread this week.
All right. With house money.
Yeah. House is money. You take half, you have a double. Agreed. Okay. But here's what I'm thinking about doing here. Okay. So the one that we're short, this weekly 190 put, I could cover that right now for about $1.95. Okay. And then I'm basically long the next week 190 put, or we could just do that math, right? So, it cost us 240, and it's 240. I mean, that's a pretty good trade. So we took basically half of that price off for next week for the options or for the earnings trade. Now, if I want to go to next Friday, okay, so I'm allowing, if I want to roll this, I might look down about 10% or something like that. The implied move is up by about 8%. I could actually then sell, turning it into a vertical. I could look down at like 170 or something like that, and I could sell, the 170 put for $1.40, or I could get the 175 for like 220 or something like that. So then I'm actually in this trade for basically free.
You got a free look.
Yeah. So we'll keep an eye on this. We'll prior to earnings, and we'll let you know what we're doing here. But I think you get a sense that we're going to be covering this Friday 190 put. We're long the next Friday 190 put. We're probably going to turn it into a vertical, and then we actually have what I think is the sort of perfect trade. Does that make some sense?
You've set yourself up into a position that allows you to potentially make more, but you've got something in your pocket if you're wrong. So we call it managing a winner.
Yeah.
I'd much rather manage a winning trade than a losing trade. So in this case, we're playing a little bit of offense and see what happens.
All right, Steph, I want to get your take on Bitcoin. Guy has been highlighting Bitcoin and the relative underperformance for the last few weeks or so ago. We're really kind of focused on this like treasury trade that MicroStrategy, Michael Saylor has been pushing for a while. Guy, talk to us a little bit about this, what's going on in the underlying MicroStrategy, and then we'll hit Bitcoin in a second.
Well, we've talked, this is, again, I don't want to make the market all about MicroStrategy, but as we're sitting here today, trading at 226, and okay, what's the big deal? Well, the big deal is, in my opinion, this is a stock that made its all-time high of 540 and change, and now we've effectively been more than cut in half against a backdrop where, although Bitcoin hasn't traded particularly well over the last couple of weeks, we're not light years away from its all-time high here at 102,000. So there's clearly something going on, and the market's clearly testing something. Now, maybe that is, no pun intended, the strategy all along. And by the way, Jim Chanos put the same trade that Michael Saylor put on, long Bitcoin, short, effectively, strategy, MSTR. I think he recently took it off, and that was a winner. But if you think about it, what's happening is exactly what's supposed to happen. The problem is, I think, Dan, and again, I'm not a mathematician, and I don't know all that much about, these treasury type situations. But if we get to a point where the price of Bitcoin approaches the average price of MicroStrategy's holding, which is about 75,000, give or take, I think you're going to see all kinds of weird things start happening, not only in crypto, but in the broader market as well.
So, Steph, lots of users on the platform trade Bitcoin. All right. And for a lot of the reasons that a lot of them like to trade Nvidia or, a bunch of these other semis. You get a lot of volatility. You're able to kind of ride some momentum when you're in that sort of market. And I think the guy's point, because let's say a MicroStrategy is so tied, right, to Bitcoin, there's going to be some stuff that goes on between this that, it's going to look a bit unnatural relative to the way folks like to trade the momentum, right? So how are you thinking about Bitcoin? Do you have any feel about folks on the platform, how they're thinking about it? Because for a while there was just euphoria about the potential. Tom Lee of Fundstrat was on CNBC, I want to say last week, saying that he could see the thing going to 200,000 by the end of the year. It just doesn't feel that way right now.
Yeah, I don't know about that. Relative to MicroStrategy, I've just always this is my personal take on it, just struggled with. it's kind of like owning gold miners. Like you got to know when to own them. And, but if you want exposure to like Bitcoin, go buy Bitcoin. And don't mess to me with the whole MicroStrategy thing. I think Bitcoin right now, like we are seeing our customers buy into this dip because that's what they do. They trade around volatility. They made, ETH had been pretty popular. It rode up. They started taking profits there and moving into Bitcoin with this pullback. So I think it's going to continue to rise, but like anything, you're going to have these like kind of sideways trading. I mean, it's down 1.3% right. That's just not like a bit. That's not big.
100K looks like a big support level.
It does.
Right.
Yeah.
And so
and that's why I think it's like sideways from here.
And, one of the things, and you guys know this, I mean, retail has been the smart money this year, right? Obi, we've been talking about it. They didn't get shaken out in April. They rode the momentum higher, even once they got to levels that no one thought were going to be anywhere near 7,000 in the S&P. Because what do we trade? 48.50 at the lows?
Give or take. Yeah.
So now, that last move, and Obi, I don't know if you want to drive on the legend here for a second, but that move, that bounce off of 100,000 that came in late September, and it went up literally 20,000 points in a straight line. That seemed like something unnatural here. Well, not only did it give it back once it kind of banged around this 110,000 level or something like that, here we are now at 100. And I guess my question to you guys, and this is like, because we started with the treasury trade, we know that stable coins is a really hot sort of thing right now. We know that there was a bunch of IPOs of, I think it's Circle, and it was bullish, and it was Gemini. And I said this on Fast Money, and this is not being a homer here because we're all great friends and everything like that. I just don't know why you need all of these crypto exchanges. If you have a Robinhood account and you have all this capability, on the legend, why would you go and open another account? You know what I mean? You want to see things holistically, that sort of thing. So Obi, I'm just curious, like, what do you think? Let's pull up a Circle for a second. This thing's down 10% today. And these things all look like they're going back to their IPO prices. And is that some sort of sentiment sort of, in and around Bitcoin? Because we know the MicroStrategy, the treasury things are coming unwound. And now we're seeing some of these recent IPOs. It doesn't seem there's a lot of demand for them. And we also see Bitcoin is heavy here.
Yeah. I mean, obviously Circle, you could take away the name Circle, and this looks like a lot of IPO charts, right? You tend to get that big pop, and then it sort of comes back to earth, and then it starts figuring out like where's its true trading range, and then technicals start showing up. I do want to go back to the Bitcoin chart for a second, because there is something interesting setting up here. We recently
go ahead. You're gonna say what I'm go ahead.
It's below a 200-day moving average. The 50 and 200-day, we're about to get a death cross. And we just had a triple top at 125. But the thing I'll say is we've had this before. And this is interesting about Bitcoin. We had death cross below 200-day back in last summer. And then we get around April on the big sell-off that rallies. And this trend line is held. And I'm sure if Carter was on the show right now, he would have a nice clean trend line in this, sort of saying
it is a clean trend line.
Like it's a very clean trend line if that's
from late 23, right? Is that what you're looking at?
Going down to like the 50. Let's see,
that's I think like near term
25,000
around here before it starts to go and continue.
And it's this formation guy. We're talking about this on a different stock. You're starting to see a possible wedge formation up to 125,000, and then the question is, how is that resolved? To be determined, I think.
Hey, so just kind of taking it the next step. So we have 3 gold bugs on the show here today, and I know that Guy, give us your 411, because you said holding 4,000 just a few days ago. Look at the move that we've had. What would you attribute that to? Because the stock market has not really moved much since then. It just seems like that maybe things got a little overzealous from 3,000 to 4,000, just a bit of a sentiment correction.
I thought, listen, as gold sort of to escalate and moved in this parabolic fashion, which historically doesn't happen, we talked about the potential for a pretty significant pullback. Now, I thought it would happen on the back of an equity market sell-off. That did not happen. Gold moved on its own, and it moved pretty dramatically. And I think a lot of people wanted to say, that's it for the gold trade. I was not one of those people, and it didn't look good for a while, but now we're starting to make the turn. And the way I look at it, Dan, and again, I'm not suggesting I'm right, but nothing has really changed in the gold story at all. It's just took this momentary pause We're starting to bounce a little bit. I think sideways action over the next couple of weeks would be healthy, but I think the overall reasons to buy gold are absolutely still intact. And, I think early next year, you're going to see a reacceleration to the upside. So gold miners have hung in there. They obviously, on that big gold down day of 4%, I think they were across the board down about 9.5 or 10%. They've recovered a bit. So, I think the gold trade is alive and well here.
Steph, so you were going to go from Bitcoin to gold. We kind of cut you off there for a second here. What do you guys see as far as, obviously you just talked about how a lot of your users, a lot of your customers have been trading Bitcoin. Do you see the same activity in gold?
I think on the future side, we see it. Yeah. We don't see it like in the kind of gold ETF world. Like we saw it a bunch actually last year, and we haven't seen a huge uptick since. So I think because we've rolled out futures, that's where people have been playing.
And the CME group has done a great job appealing to the smaller trader, because the GC contract's a pretty big contract. 100 ounces.
Will you pull it up on the legend here a little bit, because I think this is important. I think a lot of folks use the GLD, and Guy, I know you're not a big fan of that ETF here. And if you think about futures, and CME is a great partner of ours too, and we're looking at more and more futures for a whole host of reasons, but one of the reasons is your ability to set stops, whether they are sell stops, to the downside, or sell stops when you have a gain, that sort of thing. So walk us through a little bit how somebody who doesn't want to trade the ETFs, who likes the idea of, the momentum, the leverage, that sort of thing, and the risk management ability.
And the day trading capability. Let's be honest, like futures traders, you're going to be doing a lot of day trading. You don't have that issue with futures like you do with equities and ETFs. But as I was mentioning, CME Group has done an amazing job, because the gold contract, the standard GC, you're trading 100 ounces of gold. That's a big contract. Each tick is $10. Each point move is $100 gain or loss for some customers. And on a margin requirement of, about $26,000, that's a big contract. But you've got the micro gold. You've got now the 1 ounce gold future. So you really can dial in your risk and exposure. But the nice thing about trading the actual commodity is you're trading the commodity. You're not dealing with any of sort of the ETF fees or structure problems. If there's a rolling contango backwardation situation where that's going to be,
that was just a mouthful, bro. I mean, that was
especially in
rolling
commodities.
Contango backwardation.
Yeah, like so if you're trading the ETF,
aren't those opposites?
They are like
you're just throwing them all out
general.
there.
Yeah.
Oh, okay.
There should have been a couple commas.
Yeah, I was like,
comma.
Yeah, take a beat there. Bro.
Yeah, but if you're trading the ETF, like that's going to drag on performance depending on if you're in one of those
also
states.
in the 0 days, like these 0 day expiration options, like if you're good and but they're decaying every second. You know what I mean? Like, and listen, I get why people want to trade them. You're doing defined risk. You're basically your stops are in there, but you gotta be staring at your legend all day long. You know what I mean? To get
100%.
Right.
If you're trading products like this, and especially if you're day trading or swing trading, like your eyes are on screen. You want to have hands on the orders, and the active trader ladder allows you to do that very quickly. One thing I want to point out about gold, and Guy and I also talked about this last Friday, is that close Friday for equities and gold on the news of the government potentially reopening. That was a huge pivot point. As a trader that uses pivot points and pivot ranges, you can see the Sunday reopen on gold and equities ripped.
Yeah.
And then now we've had multiple days of opening range breakouts to the upside. Today is a perfect example of that. We came in overnight, bounced off of the 3-day pivot range, went into today's opening range, and up and away. So as a futures trader, that's a very common strategy that traders use. Get long above the opening range, get short below it, set your stop on the opposite side. And this is a perfect example of that type of day.
All right, Guy, I love doing fast money. I've gotten to sit next to you since 2011.
Much to your chagrin.
And you, and Guy, you being an OG, the last OG. Guy, what does that stand for? OG is a term.
I'm not sure. It's another term that I often use.
OG, original gangster, or sometimes we like to refer to you as a goat. You know what the GOAT means, greatest of all time. By the way, Jacob's not here. Jacob ran ahead of us, to use a trading parlance here. He's on his way down to Austin. Geyer and I are going to be actually doing the market call from Austin tomorrow. We're going to be at the Ascend Summit. This is Apex is a company. It's a institutional clearing firm for the markets. And so we got a big day, by the way. We're going to be we're going to do a podcast with the two founders. We are going to do on stage a couple of sessions, and hopefully we can get the audio and the video of those. And Jacob's gone down there to set up ahead of time. But Jacob normally would have said, "Hey, Guy, do you mind moving your camera down
just a smidge?"
Yeah, just a smidge. You can still do it right now, by the way. You look smaller than us. That's what I'm saying.
That's just a smidge.
One more smidge.
One more smidge.
Okay, so back to the GOAT and the OG and all that sort of stuff. I've been very fortunate to sit next to you all these years. What is one thing I love doing fast money? What is one of the only things that I hate about doing fast money?
Well, that would be the final trade.
Oh yeah. Okay, so I'm not a fan of the final trade. Yesterday's final trade was an AMD, and I said to fade the move. The stock was up like 5% after their analyst call. Okay, so Guy, let's pull up. You want to rock the legend here? Let's pull up AMD. Stock's up 10%. Yeah. Let's do it. So you saw that gap that was on that big OpenAI order. And then it's just kept on moving higher. As we say, you're going to do an analyst day. You're going to get those analysts in front of you. You better have a little something, right? Yeah. Because you don't want them walking away feeling. So Guy, you look at that chart and it's back to those prior highs that were just a week 2 ago.
Yeah.
I want to fade this thing. I said it on the final call. I want to fade. Is it too strong right now at this moment to fade this?
Well, I mean, I look at this and I'll let Obi and Steph talk about it, but this is a stock that trades 70 million shares a day. I don't have it in front of me. My instincts suggest we've probably surpassed that already on this optimism. Obviously, valuation has to be a concern. Although if you listen to Lisa Su, she thinks they're going to have 35% revenue growth for the foreseeable future. So I think the market is clearly looking past that. The problem, of course, is the parabolic nature of this move. I mean, think about it. This was like $170 stock in the beginning of October, and not an insignificant company now approaching $430 billion in market cap. So I think you're right. Now, I don't know if it's necessarily going to be a situation like we saw in Oracle, but I think it's going to be close. So in other words, I don't know if we're going back to 165 as quickly as Oracle made their round trip, but I could easily see this stock back and fill down to about 220 or so, which is another level that we held over the last couple of weeks.
All right, so Obi, with all that behind us, we know that we still have Nvidia. Okay, so that's their main competitor. What are the options telling you? Give me a sense on IV, that sort of thing, because generally it's not great trading style to, let's say, to take the other side of extreme strength like this. You almost want to see, is it going to get back to those highs? Is it going to break out through those highs? Are you seeing the sort of vol crush that might lead you to believe, okay, maybe it's not a horrible time to kind of get long premium?
Well, what I'm also seeing here is the historical volatility. So the volatility of the last month trading at 117. Mm-hmm. So the realized move is there.
Yeah.
Now the question is the options market continuing to price it in, or do we start, to your point, not only fade the price, but do you fade implied volatility? Do we start sort of sitting in a range or sort of drifting back? It's a tough call. It really depends on your opinion.
Right.
And if you're fading it,
I'm fading it. So are we doing something like in Nvidia? Are we like taking advantage of this high implied vol? We want to sell shorter dated and get long. I mean, that's my inclination, but I think it's hard to do on a day where the stock's raging. Like
I'm looking at, if we look at the option chain, the 2-day option. So especially when you're building a calendar, we're looking at the difference in implied volatilities between the expirations. We've got a 71 vol on the options expiring this week. And then we see a descending implied volatility curve. So if we went out 1 week, it's 63. If we go out 2 weeks, it's 58. So the idea, we want to sell 71 vol and buy like a 58 vol. Target a level, maybe, as Guy mentioned, to where this stock sort of comes back to earth for a little bit. Maybe we do what we did in Nvidia.
Yeah. I do think expectations have just like soared now.
To
and
your point, though,
hard.
You said 30 or guided 35% revenue growth for the next few years. That's kind of where the street was. It was
That's what I mean. I don't think the analyst day actually materially changed the outlook. And there's still the outstanding questions of like, will they get the returns? Will they have the power to actually
will they be able to execute on the quality of the chips relative to Nvidia, and do they have to underprice them, which could weigh on margins?
Well, they're definitely going to try to go after Nvidia, right? Like that's what they're trying to do. And I just, now everyone's like, if they don't do it in the time frame they said, like it's over. So I don't know.
Well, a lot of skepticism came into the Oracle thing. We had that huge gap on Oracle. What a huge contract. And then everyone's like, holy shit, they have to build out 3.5 gigawatts. That's going to cost $50 billion a gigawatt.
Like now, how are you going to finance this?
Correct.
How are you going to?
Well, and that kind of worked as well. All right, so let's do a hard turn. We're going to come back, guy, and we'll look at the AMD. Let's see how it closes today. Let's see how it trades tomorrow. I just, we don't want to be too cheeky there. I guess before we get out of here, Steph, some of these areas of the market, some of these sectors, like I just want to focus on what happens post shutdown. We know that the airlines got right in the middle of this sort of thing, right? But they actually kind of hung in there. If you want to pull up the jets, I think this is kind of interesting. They didn't trade so poorly. Do you think there are sectors now that are going to get a bunch of momentum on the other side of this? And is airlines one of them?
I don't know about the air. I always I have a hard time getting into the airline because there's always like one thing works and the other thing breaks, like oil prices go up, who knows? So I have a hard time contemplating on that. I do think that the administration can now at least temporarily turn to the other parts of their agenda. And that will be focusing on CapEx. I don't know if you heard, but Hegseth was pushing all of these aerospace and defense companies, we're going to be strategic about bidding and stuff like that. I feel like that part of the agenda where companies benefit from spending money for the government, they get rewarded for that.
All right, let's go to the XLI. Let's go to industrials because, Guy, this is a space that you focus on. RTX is the third largest holding, 5%. You can go to GE, you can go to Boeing. I think, Honeywell and Eaton, do they have some love in that space? But look at the consolidation that we've seen in the XLI over the last few months.
I'm sorry, Steph, go ahead.
Sorry, go ahead.
I was to say quickly, Raytheon, as opposed, I don't know if we can do this. I'm sure either Steph or Obi can do it, but you put a same chart of Raytheon up and overlay it with Lockheed Martin. They were both basically on a similar trajectory until right around the election, when it became clear that, DOGE was going to sort of rule the day and maybe defense spending wasn't going to be as robust. And they've gone entirely different ways. And what's wind up happening is you realize that Raytheon's a little bit more of a, I don't know, as you said, industrial company than it is a defense company. And it's showing its stripes now vis-a-vis what some of these other aerospace defense companies have done. So I think you can stay with some of these trades for sure, Dan.
Yeah. So, Steph, what were you going to say on this front? Because are you more focused on, let's say, the industrials that will benefit from, let's say, an economy where we have a better sense of what the trade situation looks like, and maybe you see a kind of reemergence to sort of growth after the shutdown, that sort of thing?
So the One Big Beautiful Bill does put $400 billion of spend into the defense sector. And I actually think just from listening to the comments and stuff like that Raytheon, I was actually thinking more about the mid cap space in the defense sector rather than so much Raytheon, although I do think it could end up benefiting. So you're looking at names that are a little smaller than them, like a Kratos, because they make the drones. And I don't know if you read, but they're going to try to increase the number of drones that we have. I think there's some stories there that are a little more micro. And I think that and then in the pharmaceutical sector, all
right, let's go there, because we spent a lot of time on pharma last night, Guy, on Fast Money. And I know that you thought this is potential for, this was going back a couple weeks, a move back to the prior highs, the 52-week highs from March. Look at this 2-day move. I mean, this is just telling you, is it, some of the moves that we've seen with the White House and the pricing? Is it just a rotation? Is it folks just saying, hey, listen, I'm full up on the AI trade, and maybe this space will be a beneficiary of AI? Obi, what have you seen? Have you seen some flows in XLV or some of these individual names? Because look at what, Eli Lilly has done of late. Look at Novo Nordisk. They're back. I'm a big Wegovy guy. I'm more of a Novo guy. But this thing bounced off of lows, trading really cheap, that sort of thing. What are people interested in all these AI players and everything like that? Are they focused on any of these names?
They've definitely way more focused on like the tech sector, but you are starting to see, like I saw in the Robinhood Investor Index, like on the kind of not at the top, but I did start seeing things like Lilly move in there. Pfizer's definitely not something that I see a lot of trading, and that company's
that had that huge move after Borla was in the White House and it gave it all back.
Yeah.
So I don't know, interesting space, interesting 2-day move.
Yeah, I mean, we had some earnings from them last week. The chart of XLV is super bullish at this point, right? You got a 50 crossing over 200-day, trying to reclaim back those old highs. So if you can say an ETF is basing right now, it's looks like it's starting to create a base.
Well, Guy, you're a big double top guy, big double top guy. If this thing were to go from where it is right now, 152.5 to that prior all-time high, if we want to just kind of back that chart out a little bit, this could be like the mother of all double tops.
Definitely, no question. And listen, we actually postulated that last night a little bit, that the level that was probably going to sort of trend up to was that, but the speed with which we're going is probably going to be problematic. But, to answer your earlier question, typically it's all of the above when there are a number of different factors at work. But I think the predominant factor is the market is rotating to things where they can get their arms around valuation, and the bullseye in terms of the government is no longer on their back. So I do think there's more room to run here to the upside.
All right. Well, listen, I think we covered a lot of ground here. It was really fun having our Robinhood friends in here. It's really fun. Actually, I usually drive on the Legend here, but it's really nice to have the architect or one of the architects of the Legend here doing some yeoman's work, as they say. It's a lot of fun. Let's see, the market. I'm looking at this, like there's some great things going on, as we just talked about, in pharma, industrials, and banks. And then on the flip side of it, how we started the show, Mag 7, man, not great. Tesla down 2.5, Oracle down 3.5. I'm not calling it magnificent, trust me. But Meta, down nearly 3%. Google down 2.5%. Amazon nearly 2%. Microsoft down 1.5%. I mean, this is some interesting price action, and so it'll be interesting to see. We talk about this concentration, whether it drags a lot of other sectors with it, or we just see this rotation, and then you have a market like we are right now. The S&P is down 16 basis points.
I do think it's interesting to see like Meta down as much as it was post its earnings reaction. So I'm sort of like, what is the market saying about them?
Yeah, and we were saying this on the way over. S&P futures hit 6,800 half right in the morning and have sold off since. So round numbers, psychological round numbers.
Wait, in the Meta, it just got to 800. This was in mid-August, and look where it is right now. It bounced to the penny a few trading days ago at 600, and it looks like it's going to attack it again. All right, peeps, Guy and I from Austin. Tomorrow, we're fired up. Hopefully, the United Airlines out of Newark is not going to have any problems here. Guy and I literally have like 3 flights each of us because we got to get down there. And it was great having you here, Obi, in the flesh. I know we're going to see you next Wednesday. Steph, we always have a mic here when you find yourself in from Brooklyn, the outer boroughs. And this was a lot of fun. Cool. I know it's cool. I'm still want to go to the Red Hook Tavern. Do you have it in there? It's supposedly the best burger, or one of the best burgers.
I'm a Minetta guy. I'm a Minetta Tavern guy.
Yeah. What's funny? Everybody goes for that Black Label burger.
Go with the Minetta burger.
I'm a pizza eater.
Oversold.
What's your favorite pizza in Brooklyn?
Weeded.
Oversold. I like that.
Weeded.
It
was written up in the New York Times.
Don't tell me it's like wheat crust or anything like that.
No. It's just like this little hole in the wall. They love whiskey and pizza.
Oh, I love that. Hey, a little fun fact about Guy Adami. Guy, you eat your pizza with a fork and knife, right?
Of course I do. And a bit.
I'm just
true Italian.
Because another really famous Italian guy, Bill de Blasio, used to eat Mayor de Blasio used to eat his pizza with a fork and knife.
He used to go to the Y in Park Slope and work out, and no one could be in there.
That's right.
You guys come to Chicago, I'll take you to Pequod's. We'll do some deep dish.
Is that deep dish?
Yeah.
I love Italian. I love the Italian beef sandwiches. What's the one from the Bear? I've been there a couple times now.
Yes.
It's a hole in the wall, but it's just great Italian beef.
It is located on Orleans and Erie. It's called Mr. Beef.
Mr. Beef.
Went there all the time. It is an amazing beef sandwich. and that's where they filmed season 1. So the
I
restaurants.
just finished season
Guy,
1.
another fun fact about Guy, Mr. Beef was his nickname in college when he was on the Georgetown football team. But I think that's probably a great place to leave it. Okay,
I love it.
Steph Gill, Mike Obucina, you can just call him Obi. I think they can call you Obi.
You
right?
sure
Anybody can.
Yeah.
Guy Adami, I'll see you down in Austin tomorrow, man. Thanks.
Safe travels, peeps.
You too.